It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, available on iHeartRadio every morning and on Spotify and Apple and wherever you get your good podcast from. Well, it's a Saturday morning, the 14th day of January for 2023. The weekend has arrived. Time to kick back for a couple of days, especially if you've been working this week. Of course, if you were not working, then probably you've only got this weekend before you are back proper for 2023 on Monday. Well, yesterday, tragedy struck with Lisa Marie Presley, dead at the age of 54, way too young, although her father, the King, died at the age of just 42. Not that there's much consolation in that for Priscilla Presley. But on a brighter note, coming up, we are back with Mortgage Talk, and this time we are speaking with Anthony Landahl, who has some interesting insights into the start of 2023. And tiny homes, is that something that you've considered for 2023? Maybe you were considering it all of last year and you've decided to get yourself into a tiny home. Well, tomorrow, as the summer series Time Tunnel continues, we've got an episode that is going to take you into the belly of the tiny home world. And why not escape this crazy world at the moment and go and live off the grid, throw away the phone, no social media? Heaven, where do I sign up for one of those? So that is coming up tomorrow morning. If you're celebrating your birthday for today, for January the 14th, happy birthday to you. You are sharing your birthday with Dave Grohl. He's turning 53. LL Cool J, he is turning 54. And one of my favourite filmmakers is also on the birthday lineup, and that is Steven Soderbergh. He is turning 59.
Informing you every morning from 6:30 with the latest real estate property news 7 days a week, only on the Real Estate Breakfast. It's the Main Centre Forecast with PRD, selling smarter every day.
All right, let's check on the weather around the country for our Saturday morning. First, we go to Sydney, expecting pretty much a ditto day on yesterday. Partly cloudy with light winds and 28. Slightly different story for Melbourne. Make sure that you're under the shade and drinking plenty of liquids, because partly cloudy skies and sunshine, but check on that temperature. The hottest day of the year, 37. Brisbane, 10 degrees lighter on 27 today with sunshine and cloudy periods. And in Perth today, good morning to you, blue skies with sunshine and 32.
We are just as addicted to property as you are. Every weekday morning from 6:30.
Well, we are holding our breath regarding what happens this year for mortgage interest rates. Of course, last year it unfolded back in May. Just a bit of a recap. Of course, in May we had the 25 basis points. Then in June, July, August and September we had the 50 basis points. And then October, November, December, 25 basis points. So it's possible the worst of the rises are behind us. We hope so. And what sort of a year does 2023 have for homeowners, investors and existing mortgage holders? Well, let's break some of this down with Anthony Landahl, Managing Director and founder of lending finance brokerage Equilibria Finance. And good morning, Anthony. Welcome to 2023 in the Real Estate Breakfast.
G'day, Craig. Great to be here, mate.
Great to have you on. And how did you go over the break? Relax?
Yeah, relaxed and refreshed. Always a good time of year to have a couple of weeks off. So yeah, thanks. Had a nice break. Relaxed, refreshed and ready to go for 2023.
Yeah, I think you're going to have quite a busy year. Somehow it's going to be one of those years that you'll need another holiday come the end of this year.
Yeah, there's always something going on in the housing market. And I think for brokers, our focus, whilst it's always on our clients, but sometimes the activity we do is shifting. And I think 2023 will reflect that with what happened in the market last year and where we're heading this year.
Yeah, for sure. And you're somebody that likes to look at data. Now, what's the data telling you on how the property market finished in 2022 and how it's going to shape up for 2023?
Yeah, look, the data always gives us some background, I guess. And as you indicated, 2022, there was a confluence of factors. We had the cash rate increasing 300 basis points over 8 months. Now it's sitting at 3.1%. We got some recent data out from CoreLogic as recently as this week, in fact, indicating there was a record peak to trough decline of 8.4% to January 7th in the housing market. And we've got recently the inflation data saying it's the highest level in 3 decades at 7.3% year on year, with our target at 2.3%. What the data is telling us is that 2023 is largely going to be shaped by monetary policy and the home lending environment, serviceability, the housing market stability. There's a lot of fixed rate expiries. So there was a lot of instability last year with those rate rises and the rapidity of them. But I think things are starting to stabilise as we head into 23 in terms of the housing market, the rate of decline slowing. In terms of rates, I think the worst is behind us. I think that will be reflected in home buyer activity in 2023.
Yeah, well, you're talking about activity. I actually think 2023 is going to be a busy year around transacting. So how do you see 2023, let's say, for the first home buyers, such an important market, and also those upgraders and investors?
I think what we've seen across the three groups is there was a genuine slowdown. For example, investor activity fell 20% April to October. Interestingly enough, first home buyer and upgrader activity remained stronger through that time than investors, but we've absolutely seen a slowdown amongst all those markets. I think some of the factors that we're seeing to help stabilise the market is people have adjusted to, I guess, a new reality. For first home buyers, yes, their borrowing capacity has fallen, maybe between 20 and 30%, but they've adjusted to that. They now understand they might be looking at a $1.2 million or a $1 million property, not a $1.5 or a $1.2 million property. Affordability has improved for the first home buyers. There's stamp duty concessions coming in. It's a difficult rental market. I think that fear of the downturn has started to stabilise, and I think first home buyers, whilst the activity is not going to be such at a frenzy, they got some negotiating power round the table now. I think upgraders, similarly, a lot of people have been looking at construction and renovations. So I think we're going to see a trend towards people maybe looking at upgrading over and above renovation and construction, given some of those very high costs we've seen flow through last year. But I think an area we're really going to see come back is around the investors. We've got strong rental yields. We've got a falling market giving us stronger capital gains. They've built up equity. They've got cash sitting on the sidelines ready to go. They've restructured their portfolios during COVID. I think we're going to see a strong time and some really good opportunities for investors. So in overview, Craig, I think the market has stabilised. The fear of the downturn has started to stabilise. People have adjusted to a cooling market.
Yeah, so we know that from last year that existing mortgages have been heavily impacted, and they do need a break in the first quarter, but probably unlikely to get it. And the fixed rates cliff, which is looming this year, how do you see all of that unfolding and playing out?
Yeah, there's a lot of talk about the fixed rate cliff. To give it some context, fixed rates as a percent of the market grew from 15% pre-COVID to over 40% through to November 2021, which is massive growth. And about 2/3 of that, or 66%, are coming off in 2023. A lot of rates are going from 2% to over 5%. A bit of perspective on that means from a $750,000 loan, your repayments will be about $1,250 higher per month. That's starting to surpass serviceability buffers. I think some people will feel that, but I also think people are well positioned. There's strong saving buffers. They've had time to adapt, and there's low unemployment. So I don't see personally a fixed rate mortgage cliff, but I see people having to readjust budgets and readjust themselves to these new rates that are coming in.
Yeah, okay. And new home buyers, now that we are into a new year, now they've got decisions to make. Some may have held off late last year. What's your advice to new home buyers and existing mortgage holders heading into 2023?
I guess my advice to new home buyers is understand your borrowing capacity, understand your budget, and put a buffer in. If you're concerned about a rising interest rate market, put a buffer of 50 basis points or 1% in, so you understand what those repayments will be in the future. Also understand you've got a good negotiation power at the table now. It's a cooling market. Buyers are in a position to negotiate prices. So there is parity now in the market between buyers and sellers. So for a buyer, you're actually coming into a pretty good environment as long as you understand your borrowing capacity and understand the impact of rising rates. In terms of existing mortgage holders, my guidance is to firstly approach your existing provider, either through your broker or directly, to get the best rate you can. Talk to your broker about other options in the market. There's some very good opportunities in the market at the moment to refinance, either as a variable or fixed rate. And for those coming off fixed rates, as I indicated before, start preparing for that now. Start making repayments as though your interest rate is at 5 or 5.5%. Start adjusting your budgets now so that when your fixed rate does come off, you've already got some buffers in there. You not suddenly have the shock of an additional 3 or 3.5% in repayments.
All right, plenty of great advice this morning. Anthony, thank you for that. Have yourself a wonderful weekend. Look forward to talking soon.
Thanks, Craig. Great to be here, mate. And have a good weekend yourself.
We connect you to the best real estate information across Australia. The Real Estate Podcast.